Hello, good morning everyone, and welcome to this morning's webinar session. We're going to be discussing stocks and shares. So that's our topic for today. Before I kick off, I'll just quickly introduce NextGenFL to those who are just logging in for the first time. NextGenFL, or as our website also says, NextGenFLX, is been set up to educate and empower the youth on financial literacy. So we're here to educate and empower you all on how to understand money, how to make money, how to invest money, and how to make your money grow. So that's what NextGenFLX is all about. So you can go to our website for further information at nextgenflx.com. If you also new to NextGenFLX, when you go to our website, you can go to the events and seminars section just by clicking there. And when you get there, you can see our previous webinars. We try and do about one webinar a month. We might increase the frequency in the future, but at the moment we're doing them once a month. And you can see the one we had last month. We had it on bonds, treasury bills, and mutual funds. But you can also watch the video of that session on the website there. And also, if you want to be updated regularly on what we do, both our live and online seminars or any competitions we might be having, you can just click on to sign up for our newsletter there. And then that way you get onto our database and you can automatically be notified when we're running a competition or doing seminars. Also, we're on social media, especially the Facebook page. Our Facebook page, if you go to facebook.com, our handle is NextGenFLX. On the Facebook page, we do have lots of inspirational stories and educative information about finance, the markets, investing, and all that. So do check out our Facebook page and like our Facebook page. And like I said, there's quite a lot of information there. Videos, stories that you can learn from and get inspired from. So do also check that out. And also Twitter. We're on Twitter, Instagram, and all our social media handles are the same, NextGenFLX. After this session, you'll be getting an email to fill out a survey. Do kindly fill out that survey just so that we can tailor-make this experience and sessions for you. So we want to teach you what you want us to teach you. So do be kind and fill out the survey when you get the email with the survey link. And you can see it's just quite a short survey. It's not a long survey. We just want to know where we can improve, what days you prefer for us to have these webinars, and most importantly, what specific topics you would like us to cover in future webinars. So do fill out the survey form, and like I said, we want to choose topics that you want us to teach you. And again, like I said, don't forget, you can watch videos of the previous webinars here, and also the recording of this session will be on this page too for you to watch at the end by tomorrow morning. So if you want to revise or go through what we're discussing again today, you can check by tomorrow morning on the site here and you see the recording there. We also have the post and video section where you see videos of the sessions we've had. So do take advantage of the website, social media handles. Of course, you can interact with us and ask us questions via our social media handles. And like I said, we're here for you. Okay, so let's get back to the topic for today, which is stocks and shares. If you're new to these sessions, you will see on your control panel, there's a hand button there where you can ask questions. I'll take all the questions at the end of the session, and you can ask as many questions as you want. So if you want to ask a question, you can click the hand button on your control panel, And also there's a question box on your control panel there, so if you have any comments or questions, you can also send them through the question box on your control panel there. So do take advantage of all that. But like I said, I'll take all the questions and comments at the end of the session. Of course, if you have a question, you can either note it down or send it through the question box as we go along, and I'll go through all that at the end of the session. Okay, so let's kick off. Stocks and shares. What are stocks and shares, and what's this all about? To understand stocks and shares, we have to start from the basics, and the basics is understanding what a company is. What is a company? What are companies? Because that's the basis of understanding stocks and shares, is first of all understanding what a company is. Now, a company is an organization that sells goods or services in order to make money. So basically, companies are set up to make money. So it's not like a non-profit organization or charity where they're set up not to make money. But when a business or a company is a business, they're there to make money. So it's always understanding that that's what a company is all about. So a company is an organization or business that's either selling goods or services in order to make money or to make a profit. So that's what a company does. So of course, when you buy stocks or shares of a company, you then own part of that company. So you then now become a stockholder or a shareholder of that company. We've got an example here, for example, with Dangote Sugar. So Dangote Sugar is a company that is in the business of selling sugar. So they provide, their product is selling sugar. So that's Dangote Sugar, that's what their product is. So Dangote is a company. Of course, they do lots of other products, but let's just concentrate on the Dangote Sugar. So the Dangote Company Sugar, their product is selling sugar, so that's the product, and they want to do it to make a profit. So if you like the company, Dangote Sugar, and you want to profit with Dangote Sugar, you can then now buy stocks or shares in that company. And once you do that, you now own part of that company. So you're now a stockholder or a shareholder in Dangote Sugar. And that's why it's important to understand this basic thing when you're thinking about buying stocks and shares, is that when you buy that stock or buy that share in a company, you own part of that company. And since you're going to own part of that company, it's very important you know about that company. You know about what that company does to make money. You need to know about their products and services so you can understand what that company is doing to make money, so that you can then profit along with them when they're making money. So that's why it's always crucial for you to understand what a company is, what the company does, what are their products and services. And then once you understand that, if you want to now benefit from that company making profit, you can then buy a stock or share of that company. So basically, when you do that, you now own a stake in that company, and you now become a stockholder or a shareholder. Some people define it as having an equity in the company. So an equity, again, is just another English word for saying you own part of that company. So that's why some people, instead of saying stock or shareholder, they can say you're an equity holder. And that's why sometimes they can call it the stock market, whereby you're buying stocks and shares. They call it the stock market. Again, some people call it the equities market. So equities, stocks, is just the same thing. They all mean the same thing. It just means you have a share in that company, or an equity in that company, or a stake in that company. So that's why it's always important to understand those basic things when you're thinking about buying stocks and shares. So how do you invest in stocks and shares? So what are you going to do? How can you begin to benefit from all this? Now, when you buy shares, you expect them to increase in value over time. Again, that's why it's important to understand, what that company does and what they're doing to make money, so that you can see whether, okay, the goods or services they're providing is something that is in high demand and they're going to make money. So you then buy shares because you then expect them to increase in value over time. So again, that's why it's important to understand what that company is doing. Because obviously when you're buying shares in that company, you're expecting them to increase in value over time, and that's how you're going to benefit from that company being profitable. So a good example, for example, it's Apple. So we all know Apple computers. So if you buy shares in Apple computers because you know iPhones are in demand, then you want to buy a stake in Apple or buy a share in Apple, so you become a shareholder in Apple because you're expecting it to increase in value over time. The same like we just said earlier with Dangote. Let's use another product of his, Dangote Cement. You might say, okay, Dangote is the richest man in Africa. His companies are doing well. The Dangote company is doing very well, so you now want to buy a stake in Dangote because you know they produce cement, they do sugar, they do a lot of things that are very popular and also in high demand. So because of that, you know that Dangote's products are in high demand and they're doing well. So you want to buy shares in Dangote because you think it's going to increase in value over time. So that's one way of looking at investing in stocks and shares. Now, with some companies, the additional benefit is that some companies will pay you a portion of the profits, which is what is called dividends. So some companies, when they make a profit, then they will share some of that profit with the shareholders, and that profit sharing is called paying you a dividend. So some people get this dividend payment also in addition to the value of the stock going up. So you can see you can benefit in two ways from investing in stocks and shares. So number one, just a quick recap, you can benefit from the value of the stock itself going up in value. So for example, if you buy the stock at 10 Naira today and it goes up to 30 Naira in a couple of months, it has gone up in value. So if you sell it at 30 Naira stock or a share when you bought it at 10, you've made a 20 Naira profit on one share. So that's it going up in value over time. But also, like I said, if the company is making a lot of profit, they could also pay you a portion of that profit and send you a check, which is called a dividend. So that's another way you can benefit from investing in stocks and shares. So that's why a lot of people love, investing in stocks and shares. You can benefit both ways, from the value going up and then also from them paying you out dividend. So you can profit from both. You can profit from the value of the stock going up, which is what we call the growth of the stock, or calling growth stocks, and also from payment of dividends, which we call income stocks. So you can have stocks divided into growth stocks, stocks that you believe they're going to go up in value over time. And you can also divide stocks into what we call income stocks, which are the companies that pay out dividends. So an example is like Guaranteed Trust Bank. Guaranteed Trust Bank, First Bank, quite a few companies in Nigeria do pay out dividends. So apart from you buying their shares and the value going up, you can get regular checks of a share of the profit sent to you. Obviously, you'll get the profit, the amount they will send to you will be in proportion to the number of shares you've bought in the company. So always remember that's two ways you can benefit from stocks and shares. Now let's look at the value, the price, the actual price of the stock itself. Now stocks do not have a fixed value or price, and this can change at any moment. So that's, as we all know, that the value of a stock can go up or down. So the value of a stock is not fixed. So if you see the price of a stock quoted today at 10 Naira, it doesn't mean it's always going to be 10 Naira. It could go down to 5 Naira, it could go up to 20 Naira. So they are not fixed, and they can change at any moment, and they will change depending on what people value it at to be. So again, let's use as an example. If everyone thinks Dangote shares are very good and everyone loves them and they think that it's going to do very well and it's in high demand, then the value of that Dangote shares or the price of that stock will keep going up. If everyone thinks it's a horrible company and their products are bad and nobody wants their products, then the price of that stock will then start to fall, because people start to sell it and they'll start to get rid of that stock, and then the price will start to fall. So the value or the price of the stock, always remember, can go up or down depending on the perception of what people think of that stock as to whether that company's products or services are in demand or not. So like I said, the market conditions, investor perceptions, and other factors such as its product and services and profitability can affect the value of a stock. So these are some of the things you want to consider before you buy a stock or when you're looking to buy a stock. Because if you're looking to buy a stock, let's start with market conditions. So as we all know, during the recession, when everybody feels there's no money in the economy is doing badly, and there's everyone just feeling bad about the economy, then you find that the price or the value of stocks tend to fall because people just don't feel good about the stock market and about the condition of the economy. So in that kind of a scenario like we had recently when we had the recession, the price of the stocks tend to fall because the market conditions were not good. And then, like I said, with investor perceptions, if people feel that, all of a sudden people feel, oh, this stock is doing very well. A good example, of course, is, Apple. Everybody has very good feelings about Apple because their products are in high demand. They're making a lot of money. Everybody has an iPhone. So investors perceive it to be a very good company, and that perception can then make the price of Apple shares very high. And then, like I say, other factors is its products and services. So if you like Dangote again, if your products, they do everyday products, sugar, noodles, cement, products that everybody uses and everybody wants. So it's a profitable company, so that makes the price of that stock quite valuable and high. So these are the sort of things you need to factor in when you're thinking to buy a stock and what can affect the price of the stock. So always remember that. So what types of stocks do we have? There are different types of stocks. We have what we call cyclical stocks. Now, with cyclical stocks, it's a stock that rises quickly when there is good economic growth and the economic growth is strong, and it falls rapidly when the growth is slowing down. So you can find out with this, that's why they're called cyclical. So if there's a boom in the economy and everyone is feeling good, there's a lot of money in the economy, and the economy is doing very well, then you find that these stocks also do very well. But again, when we have a recession or the economy is doing badly and everyone is feeling gloom and nothing is happening well in the economy or in the country, then the price of these stocks tend to fall. So these stocks, which are called cyclical stocks, they tend to go up when the economy is doing very well, and they tend to fall when the economy is doing badly. And again, in Nigeria, we found that out, again, during the boom times where, everyone was feeling good in Nigeria and there was money, being thrown around, the stock market was booming. And then when we had the recession and things were not too good, and the stock market fell. But the stocks that tend to be very sensitive to this For example, is stocks that are related to the car industry. So the automobile markets, obviously, when the economy is booming, people want to buy new cars. When the economy is doing badly, they don't have money to buy cars, so those shares for this car stocks will fall. And then the same to do with things like airlines. Most people tend to fly and go on expensive holidays when they have money and the economy is good. When the economy is doing badly, most people sit at home and don't have money to be flying around the world. So again, the share price or the value of this airline stocks will fall, and the same with hotels and the housing market. So you find that shares in this kind of industries, the car industry, the airline industry, the hotel and housing industry, they tend to be closely tied with how well that country's economy is doing. So if the economy is doing well, this kind of stocks will do well. If the economy is doing badly, this kind of stocks will do badly. So that's why they're called cyclical stocks. So apart from the cyclical stocks, we also have what we call defensive stocks. They're not defensive because they're to do with the army. They're defensive, or they're sometimes called non-cyclical stocks because these are stocks that tend to remain stable under difficult economic conditions. So that's why they're called defensive. They're defensive because they just tend to remain stable regardless of what's happening in the economy. So don't get fooled by the word defensive. It doesn't mean you're buying stocks in the army or guns and all that. So yes, they're also called non-cyclical stocks, and like I said, they tend to remain stable under difficult economic conditions. So example of defensive stocks is food. So if you're buying stocks and companies that deal with food, they tend to do well regardless of the economy because people have to eat. Everyone has to eat. So we find that companies invested in food do well. Tobacco, especially because people who are smokers are addicted to smoking. So again, regardless of the economic situation, they will still smoke, they will still drink. The alcohol industry, then of course oil and utilities, so things like gas, water, things that people just can't do without, regardless of economic conditions. So stocks in this kind of companies that deal in this kind of goods and services, they tend to remain stable under difficult economic conditions. So it's always wise to also consider that factor when you're trying to buy stocks. So I'll just do a quick recap of what we've said so far. So like I said so far, the good thing about when you're considering stocks and shares, you need to, number one, understand what the company is. You need to understand that companies are there to make money. So a company, deals in products and services in order to make a profit. And that's what companies do. And then if you buy a share in that company, you then become a shareholder or a stakeholder in that company. You then also want to profit along with that company. So it's always important to understand what is that company's product or service, and you think they're going to do well before you consider buying a stock or share in that company. Then also, when you're investing in stocks and shares, you can either benefit from the value or the price of that stock going up in value, or you can also benefit from them paying you a portion of the profit, which is the dividend. So that's how two ways you can profit when you're invested in stocks and shares. So also when you're also looking to buy stocks and shares, you also need to consider whether that company stock is a cyclical stock that moves up and down with the economy, or whether it's a defensive stock, like we've just said now, whether it remains stable under difficult economic conditions. So that's how we've just done a quick summary on how you can make money on stocks and shares. So it's always important to remember all these things and all these factors. Like we said, The value of the stock will depend on the market conditions. It will depend on investor perceptions. What do the investors perceive of that company, whether they think that company is doing well or not. It will also depend on what are the company's products and services, are they in high demand. So all these things will then, determine whether the stock you bought are going to go up in value or not, and how you can profit from it. So stocks and shares, as you can see, is a good way to make money. So a lot of people are making money in the stock market. As we all know, the Nigerian stock market, although they had a rough week a week ago, but the market has bounced back. And overall, the stock market is doing very well. A lot of people are making good money in the stock market. But, for you to you still have to be careful and consider the factors we've just discussed when you're choosing or picking the stock you want to invest in. You need to know a bit more about that company, what they do, what the investor perceptions are, before you decide about buying that stock. Okay, so how do you actually start doing that? How do you, begin to buy stocks and shares? For you to do that, you need to have an investment account. So yeah, it's not something you can get in a supermarket. You can't go to a supermarket and buy stocks and shares, or you can't buy stocks and shares via your bank. So you have to do it through a broker, or you have to have an investment account or an investment brokerage account. So that's the first thing you need to do. So to access the stock market and buy stocks and shares, you need to open an investment account with an investment brokerage firm. So that's the first thing you need to do for you to start investing in stocks and shares. But the other thing I would just advise is that you need to make sure that the brokerage firm that you register with is licensed and registered with the Securities Exchange in the country that you're based in. So, of course, if you're in Nigeria, you have to make sure the investment brokerage firm you're registering with in Nigeria is registered with the Securities Exchange in Nigeria. If you're based in the UK, you need to make sure the brokerage account you're using in the UK is registered with the UK Securities Exchange. If you're based in the USA, you also need to make sure the brokerage firm you're registered with is registered with the Securities Exchange in the USA. So once they're licensed and registered, that they're good, you can just register with them and then start buying stocks and shares. These are some recommended brokerage firms that come highly recommended that you can use. There's Investment One Financial Services, and that's their website and the contact details there. You also have FPN Quest, again their website and contact details there. That's for Nigeria. And then of course for those based in the UK, you can use Hargreaves Lansdown. So these are the brokerage firms I use personally, so that's why I can recommend them, because I use them myself. Okay, and like I said, you also don't have to worry if you can write all this down. Like I said, the recording of this session is going to be posted on the website, and you can view the recording on the website from tomorrow morning. Okay, so that's it on stocks and shares. We're going to have an upcoming quiz competition, which will be based on this session actually. So there'll be a question that we're going to be asking you all for competition with cash prizes come the 5th of March. So watch this space. The competition will start on the 5th of March. And like I said, we'll be asking a question about the stock market. This will be advertised on our social media handles on the website. Of course, when the competition starts, you have to send your answers via our Twitter handle at NextGenFLX and use the hashtags NextGenFLX, #quiz, #stock. But like I said, the full details will come out when the competition starts on the 5th of March with the question you have to answer. And like I say, you have to send the answers via our Twitter handle with the hashtag. Okay, so just spread the word, and like I said, you can contact us via info@nextgenflx.com. Our website is there, NextGenFLX, and like I said, we're on social media, and all our social media handles are the same, NextGenFLX. Okay, so any questions? If you have any questions, do click the hand button on your control panel, or send your questions or your comments through the question box. Like I said, you can ask as many questions as you want. Let me just put up the recommended brokerage firms on the screen again, so you can also see that while I wait for questions. So like I say, if you have any questions, comments on stocks and shares, any concerns you have about stocks and shares, about what you can do, like I say, do click the hand button in your control panel, or send your questions or comments through the question box. Now let me just see if I can get the recommended brokerage sites up again. Yep, got them here. Good. So there you go. So those are the recommended brokerage firms that you can use. So like I say, watch out for the competition coming out on the 5th of March. The competition will be advertised on our social media handles, on the website. And like I said, there will be cash prizes for those who win. Okay, so let's take questions. Let me just have a look at the question box.